Good to go. A company is considering the proposal of taking up a new project which requires an investment of 800 lakhs on machinery and other assets. The project is expected to yield the following earnings. They are not cash flows. They are earnings before depreciation and taxes over the next 5 years. These are the earnings before depreciation and taxes. See, all the figures are different. They are not same. So I will not be able to do 1 to 5 years. I'll have to prepare separately for all 5 years. 1, 2, 3, 4, 5. The cost of raising the additional capital is 12%. And the asset have to be depreciated at 20% on written down value basis. Depreciation is WDV. So there is no question of same cash flow every year. The depreciation will change every year. So you'll have to prepare for 1 to 5 years. The scrap value at the end of the 5 years period may be taken as 0. The income tax applicable to the company is 40%. You are required to calculate the net present value of the project. So only NPV is asked. And advise the management to take appropriate decision. We will be advising in good manner. Also calculate IRR of the project. So there is no working capital, that is good. But we will be finding out first cash flow, and then we will try out to find out NPV and IRR. All right. See how I am solving the question. At the end of 0 year, first year, second year, third year, fourth year, and 5th year. What figure is given? Earning before depreciation and taxes. Earning before depreciation and taxes. In 0 year, there is no earning. Today, there will be no earning. 1, 2, 3, 4, 5. 320, 320. 360, 360. 300. After this, I'll have to find out depreciation. Depreciation is not by straight line method. So you will have to find it out for 80 years, all 5 years. 800 lakhs is the cost of machinery. Statement showing depreciation. Cost is 800. Rupees are in lakhs. All rupees are in lakhs over here also. Rupees are in lakhs. Depreciation is the 20% WDV. So 800 minus first year depreciation is 160, 20%. Complete the chart. This is 640. Minus second year depreciation. 640 into 20%. 128. $640 minus 128, 512. Minus third year depreciation. 512 into 20%. 102.4. 512 minus 102.4, 409.6 minus fourth year depreciation, 409.6 multiplied by 20%, 81.92. $409.6 minus 81.92, it is 327.68. minus fifth year depreciation. 327.68 multiplied by 20%. 65.54. 327.68 minus 65.54. 262.14. This is WDV at the end of fifth year. I will have to write down depreciation for every year? Yes. Depreciation for each year is 160 for first year, 128 for second year, 102.4, 81.92, 65.54. I will be finding out next column earning before tax. How to find out? EBDT minus depreciation. EBDT minus depreciation. 320 minus 160 will be 160. 320 minus 128. 192. 360 minus 102.4. 257.6. 360 minus 81.92. It is 278.08. 300 minus 65.54. 234.46. I've got EBT. I will not be finding out tax column. I know from EBT how to find out EAT. How I'll be doing it is, I will be directly finding out EAT. How? EBT multiplied by, what is the tax rate? 40%. Multiplied by 60%. How? If tax is 40%, earning after tax will be always 60%. So it is 1 minus T, EBT into 1 minus T. So my one column will be less. Is it alright? Because of this particular knowledge. EBT multiplied by 60%, that is 160 into 60%. 96. 192 into 60%. 115.2. 257.6 into 60%. 154.56. 278.08 into 60%. 166.85. 234.46 into 60%. 140.68. I am rounding it out to 2 decimals, right? How to find out from EAT cash flow? I have deducted depreciation. Now I will add back depreciation. So I will be getting cash flow from operating activity. This is cash flows. How I will be finding out? EAT plus depreciation. So this column plus this column. 96 plus 160. 256. 128 plus 115.20. which is 243.2, 102.4 plus 154.56, 256.96, 81.92 plus 166.85, 248.77, 65.54 plus 140.68, 206.22. This is cash flow from operating activity. All of you are getting it? All right. If I want to purchase this machinery, what is my cash outflow? 800 lakhs. That 800 lakhs will be at the end of 0 year. Negative purchase price 800 lakhs. You can do this work in working note separately. It does not matter. All right. This is where our answer will differ from the suggested answer, but our answer is absolutely correct. This machine was purchased at 800 lakhs. If it was purchased at 800 lakhs, then it is sold after 5 years. At what price? May be taken as 0. What is WDV at the end of 5th year? WDV at the end of 5th year is 1, 2, 3, 4, 5. Yes. What is WDV at the end of 5th year is 262.14. At what rate it is sold? 0. A asset worth rupees 262.14 is sold at 0 rupees. Can you tell me there is a profit or loss? There is a loss of how much? 262.14. Is it all right? This is a capital loss? Yes. Sir, you don't have to pay this to anyone. This is non-cash. I agree. You have already paid for machinery. So at the end of 5 years, you are having a loss. It is a non-cash, agreed. But you will save tax on it. In introductory lecture, we have understood this. If you are having profit, you will have to pay tax. If you are having loss, you will save the tax. And what will be the tax savings? Will be 262.14 into 40%. Now you don't have to do 1 minus t. 1 minus t gives you after tax cost. Multiplied by t gives you tax benefit. What will be tax benefit? 2 262.14 multiplied by 40%. It is a 262. It is 262.14 multiplied by 40%, which is 104.856. 104.85 or 86. $104.86. This is tax savings will happen at the end of the year. Is it all right? It is a tax savings. Tax savings is cash inflow. So it will be tax savings at the end of the 5th year. And it is how much? 104.86. And it is positive. All right. So, is there any other point like working capital? No. I have taken into consideration depreciation, cost of capital and tax benefit. So, all the cash flows are under consideration, right? I can find out cash flow for all the year. Cash flow at the end of 0 year will be 800. This will be 256. Second year will be 243.2. Third year will be 256.96. Fourth year will be 248.77 and fifth year will be 206.22 plus, because this is tax saving, 104.86. It is 311.08. So I am having cash flow for all the years. 1, 2, 3, 4, 5. Cash flow is 256. You don't have to write it down again. 243.2, 256.96, 248.77, 311.08. Don't see the answer. Yes. What is my required rate of return? The cost of raising the additional capital is 12%. So I need to discount this at 12%. Present value at the rate of 12%. You need to find out present value of cash inflow. Sorry. Please all of you concentrate. I am giving you new method of solving the present value question. What we normally do to find out present value of this first year, multiplied by 1 divided by 1.12 raised to 1. Can you find out in your calculator what is 1 divided by 1.12 raised to 1? Is it 0.89 something? Is it 0.89? So which is this figure given? 1 divided by 1.12 raised to 1. This figure is 1 divided by 1.12 raised to 2. So instead of writing down factor, I am just copying this. Multiplied by 0.89. Multiplied by 0.89. Multiplied by 0.80. Multiplied by 0.71. Multiplied by 0.64, multiplied by 0.57. So this will be less error prone. You can just use your function of GT and find out the answer, right? By writing down this factor. Once again, what is 0.89? It is 1 divided by 1.12 raised to 1. What is 0.71? It is 1 divided by 1.12 raised to 3. What is 0.57? It is 1 divided by 1.12 raised to 5. Correct. Yes, the answer will be approximate because you have rounded it off to 2 digits. All right. So the answer will be approximate. I don't have GT, so I'll have to use M plus 256 multiplied by 0.89 is equal to M plus 243.2 multiplied by 0.8 is equal to M plus 256.96 multiplied by 0.71 is equal to M plus 248.77 multiplied by 0.64 is equal to M plus 311.08 multiplied by 0.57 is equal to M plus MRC 941.37. Minus present value of cash outflow 800, we have already found out 800. This is 131.47 is nothing but NPV of the project. This is my NPV 131.47. Now whatever calculations I'll be doing, that will be of IRR, because IRR is also asked. Uh, 931.47 is the correct answer, or there is a difference? 940, 941 point. All right, you have done it by taking this factor, right? All right, I'm changing the answer. I might have made some mistake. It is 941.37. So this is 141.37, right? 141.37. Positive, negative, positive. So as per NPV, you should accept the project. Is it all right? And this is my NPV, present value at the rate of 12%, 141.37. All right. Now I need to find out IRR. For IRR, I will require one positive NPV, one negative NPV, so that I can decide the range. Should I try out at 10% or should I try out at 14%? Because both rates are given. 10% and 14% factors are given. Should I try out at 10%? Will the project be earning 10% or more than 12%? More than 12%. So I will try it out with 14%. Find out NPV at 14% multiplied by 0.88. No need to write down cash flows again. Huh? 0.77, 0.67, 0.59, and 0.52. You need to tell me present value of cash inflow. What is present value of cash inflow? 893 point minus 800. So here also it is positive, not important for us. 93.20. Try it out at 16%. Also I am getting positive NPV. Try it out at 20% then. Because at 16% also there is positive NPV. Find out at 16% and 20% both. I want NPV at 16% and NPV at 20% if anyone is having. NPV at 16 also you have not got? It is? It is 50.72? Okay. $50.72 is NPV. At 20%. Negative 26.84. Even if your answer of NPV is not right now in your book, please try to concentrate over here. At 16%, my NPV is 50.72 positive. At 20%, it is 26.84. Negative NPV at 20%. Can you also tell me what is your NPV at 12%? 141.37? 141.37 is NPV at the rate of 12%. I want to find out IRR. I can use these two figures because one is positive NPV, one is negative NPV. I have got the range. What is the range? Is my IRR will be 16% to 20%. I will be using interpolation technique to find out the answer. Every time I will not do it logically because it becomes a very lengthy process. IRR will be is equal to base rate. What will be taken as base rate is 16%. Plus positive NPV divided by difference in NPV multiplied by difference in rate. Base rate is 16 plus positive NPV is 50.72. What is difference in NPV? 50.72 minus 26.84. No, it is minus minus, so it will become plus. It is 50.72 plus 26.84. It is 77.56. Multiplied by difference in rate. What is difference in rate is 4. 20 minus 16 is 4. This answer will be 50.72 divided by 77.56 multiplied by 4 plus 16, which is 18.62%. All of us are good, should be good with IRR. Can you tell me what is the project NPV? Last boy, last bench. What is project NPV? Today morning you were saying 0? Yes? Okay, I'm not able to hear you. It is 141.37. It is not 0. NPV is NPV at required rate of return. So project is earning 12%. It is earning exactly 18.62%. All right. Please understand, they are asking us our advice. I will be writing advice specifically. Advice. As NPV is positive, also IRR is greater than required rate of return. Project should be accepted. So see, in my advice, my logic is also shown. I am also telling to the paper checker that I know what is the meaning of NPV and what is the meaning of IRR. This was a good full-fledged question. It was not asked in any examination. It is from revision test paper of May 2020. It is full-fledged because you find out less question with WDV method. You don't find out majority of question with WDV method, because then question becomes of 10 marks or 12 marks. You will have to calculate this one chart more. You will also have to calculate the tax benefit on depreciation or tax cost on depreciation. Tax cost on capital gain or tax benefit on capital gain. So this is all for this particular lecture. We will be doing all other sums in next lecture. Thank you all. You can